How do you, in your mind, as an investor who focuses on real numbers, real pricing, real valuation, real what's the management doing, everything's very like concrete. How do you, as an investor, think about these big, far-off questions of what's our world going to look like in 20 years? Not even getting to the point of like which company is going to win the internet data, whatever. But like, how much do you think about that stuff?
Well, I think about it in this context, and that is if you had known that you should invest in IBM in the 1950s, for example, how would you have done compared to, say, buying an old staid railroad stock, right? Railroads were getting dumped, and the future of commerce was air travel and air freight, and IBM was clearly the future. They were making a computer, and it was amazing. And if you'd bought IBM versus railroads, and you would have crushed it with the railroads, you would have crushed the IBM returns. And that's just the nature of speculation. And the market is loaded with speculators who want to bet on the future. And all they remember, of course, is their winners, just like gamblers in Las Vegas. Mm-hmm. I put my money into Amazon. Tim Ferriss, God bless him, is my favorite guy out there for podcasts and stuff. And I love the guy. And all you hear are, you're going to hear the winners. And if you invest in enough stuff as an angel investor, as Tim has, you're going to have some winners, and then you can brag about those. But overall, good luck, because all those losers can bring you down, and you just don't know. Also, I'd add that Warren Buffett was introduced to Jeff Bezos back in the middle 90s. Bezos is a brilliant guy. We've talked about this before. He's not just some guy in a garage in Seattle, right? He was in wherever Renaissance is hanging out. I forget, it's Connecticut, I think. He was a Renaissance guy. He was one of these 300 rocket scientists who were being recruited because of their enormous math and science skills and genius IQs to apply those to trading. And Renaissance are a bunch of guys who compounded money at 75% a year for 20 years. I mean, just seriously the best investors in the world. And Bezos asked his boss, one of the guys that started the company, that they've been looking at this idea of books online, and and he thought, what, I think I can really make something out of this. Do you guys mind if I run with this? And the owners basically said, hey, go for it. And he said, what part of the ownership of this do you want? And they said, none of it. You just go and do it. And so Bezos drove across the United States and figured out how he would build Amazon.
And Buffett knew about him.
Buffett met him in Seattle. Buffett looked at what he was doing. Buffett looked at what the other 30 guys were doing, and couldn't pick Bezos as a sure winner. And the discipline of this style of investing is to get as close to certainty as we can get. And when you're not close. I mean, right? When it could be this or it could be that. You're making a bet. And we don't like to make bets. We like sure things, And
so what I hear you saying is that you're focused on the actual companies, and you really don't think that much about what's going to happen generally in the future.
Huh? No, I don't think you can think about what's going to happen to this company apart from what you think is going to happen in the future generally, right? I mean, you have to understand that there are broad trends going on. For sure, because you're effectively looking out farther than, most people call themselves investors, are thinking in 90-day chunks, okay?
Yeah.
But if you're looking out and saying, okay, in 10 years, this is going to be bigger than it is today, then certainly you have to be looking at the moat challenges, what's coming up against this moat. So if you're interested in oil and gas, are you thinking these are really a bargain? Or are you thinking, wow, the challenges to the oil and gas moat are so severe that I don't need to be putting my money in here because I don't know where this is going to be in 10 years.
So maybe on a more like industry level, you tend to think about it.
You have to. Yeah, I do think about it like that. But ideally, you want to look at stuff that isn't going to change. In other words, are they going to change how much people eat chocolate you know, in the next 30 years, or how much people drink Coca-Cola, or right? Are those things going to radically change over the next 30 years?
But
those
I
are
also,
two examples
like
that
Buffett
could, right?
also did say that he really made a mistake by not investing in Amazon years ago. Not at the beginning, but after it had proven himself, after the company had proven itself to be more than a bookseller online. I think they had probably already started AWS, and that's when Buffett said I should have bought it. And he just, he wasn't sure what it was really worth, basically, is what he said.
Right. That's the catch. That's the catch, is that these things get bid up
but
by
I
the
think
enthusiasts, right? You want to buy Tesla right now?
Do I? No.
Yeah, why not?
No.
I mean, it's obviously wonderful and obviously changing the world, and it owns Solar City or whatever. And I mean, how cool would it be to own that, right? So the people who think they're investors who own it because how cool is it? I'm putting my money where my mouth is.
Yeah. That's one way to think about it. Yeah. How cool is it? For sure. I'm sort of intrigued again by the Amazon, like, what is the future? What are we going to need in a few years? And then they go and they do that. And having a company that thinks like that is super interesting to me and exciting. That
is super interesting, super exciting, and I'm just going for more boring stuff. It's just here's what I want. I want this kind of amazing degree of boredom where if I buy a house across the street to rent out, you know this, right? I've told you this so many times, is I want to buy it so that it's paying me 10% per year of the purchase price. And then I'm not particularly going to worry about whether real estate's going up or down over the next 4 or 5 years. I don't care. I mean, I may never care because I live in a part of the county that is, as far as I can tell, only going to improve and become more and more valuable as people expand out of Atlanta. It's a really well-run county, and they don't make land like this anymore. So I feel like it's got a huge moat by virtue of its location. And if I can get paid 10% a year, I know that as time goes along, there's this natural, almost gravity of economics that says inflation is going to increase. In fact, the Federal Reserve is intending to increase inflation at 2% a year.
Yeah.
So I know my rents are going to go up.
Yeah.
Right? So I want that level of comfort and certainty in a business that I own. That's my lodestone. That's my North Star right there. You guys, if you enjoyed this video and you feel it was valuable in teaching you more about how to invest, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen. We got a free gift for you. Thanks again for watching.